Well, the U.S. dollar, though, is still dropping again after it enjoyed a few days of respite last week. Our next guest says while the greenback hasn't hit bottom, there may not be too much downside left for the greenback. Sophia Drossos is co-head of foreign exchange strategy for Morgan Stanley, and she joins us from her offices this morning. And Sophia, good to have you with us.
Thanks, Betty. Glad to be with you.
So do you agree with Mundell that it looks as if the dollar's decline is abating at some point?
Well, at some point, you get valuations kicking in. And the thing about the dollar is it's quite weak from a historical basis. But we do need fundamental triggers to make the dollar rally. And in specific, we're looking at growth and interest rate differentials. They need to move in favor of the U.S. dollar. So we don't see that happening until the late next year. For us, we're looking for the dollar to continue declining, but at a really slower pace than what we've seen recently.
Well, I mean, is there any possibility, any scenario that you could dream of, Sophia, where the dollar could rebound without a substantial or without an increase in interest rates?
The dollar, well, I guess that the dollar could appreciate if we see a more negative scenario globally. So if you do get any kind of risk aversion coming back into the market, what we saw in 2008 is that the dollar responds very favorably to risk aversion as global investors seek out the safety of U.S. treasuries. So that could be an environment where interest rates might be falling, but the dollar could be rallying. So the dollar could benefit from global risk aversion.
But would that be just sort of a short-term rebound for the dollar? I mean, you would need to eventually have interest rates rise in order to see a substantial reverse for the greenback.
Yes, that's right. As you saw in 2008, when we did have the global panic in markets, you definitely saw the U.S. dollar rally, but that did prove to be short-lived. At the end of the day, you need to give investors an incentive and a reason to come to the United States, and we need to see stronger growth or stronger interest rates to attract those foreign capital flows.
So what did we see last week then for the dollar? I mean, we saw a few strong days for the currency. I mean, what was that about?
Well, last week was very interesting in terms of the dollar. We had a lot of official rhetoric aimed at trying to support the dollar. It's very rare to hear a lot of policymakers globally give support to the dollar. And along those lines, it is extremely rare to hear the chairman of the Federal Reserve voice support for the dollar. And that's what we heard last week. Chairman Bernanke was making it pretty clear that there's no policy of benign neglect towards the dollar. That helped the dollar to consolidate a little bit. But to your earlier point, it wasn't enough to help the dollar maintain those gains. At the end of the day, we still need to see a positive shift in U.S. fundamentals, and we're not quite there yet because investors don't think that the Federal Reserve is ready to raise rates.
Okay, Sophia, well, in the time that we have, though, getting outside the dollar, I mean, what are your best bets right now in the currency markets? Is it in the major currencies or is it in the emerging markets?
You know, at this stage, we think some emerging market currencies might offer more attractive bets. In particular, we're looking at currencies in non-Japan Asia. These are currencies that are very tied to the global growth cycle. So the cyclical story is very supportive of them. And also, we're seeing a lot of policy measures that were aimed to restart growth in those economies really start to bear fruit. So we think that next year, we're going to see some policy normalization in these economies. And in particular, we like the Korean won, which also on our fair value metrics looks to be undervalued. So there's a lot of positive aspects suggesting that non-Japan Asian currencies should start to build on their rally.